Welcome to Peter Slaxton's YouTube channel, your go-to place for mastering your money and building a brighter financial future. Here, we break down complex financial topics into simple, actionable steps so you can take control of your finances, grow your wealth, and achieve your goals. Whether you're saving for your first home, investing for retirement, or just looking to manage your money smarter, we've got you covered. If you're ready to level up your financial game, don't forget to hit subscribe and turn on those notifications so you never miss a tip. Now, let's get started on today's topic. Best investment strategies for beginners this year. Investing as a beginner in 2025 can be both exciting and rewarding. Here are some strategies to consider. 1. Start early and consistently. The earlier you begin investing, the more you can benefit from compound growth. Regular contributions, even small ones, can accumulate significantly over time. 2. Diversify your portfolio. Allocate your investments across various asset classes, such as stocks, bonds, and cash, to mitigate risk. Diversification can help cushion against market volatility. 3. Consider index funds and ETFs. These funds offer exposure to a broad market index, providing diversification at a low cost. They are particularly suitable for beginners due to their simplicity and lower fees. 4. Implement dollar cost averaging. Investing a fixed amount regularly, regardless of market conditions, can reduce the impact of volatility and eliminate the need to time the market. 5. Focus on long-term growth. Adopt a buy and hold strategy by investing in companies or funds with strong growth potential and holding them over time, rather than frequently trading. 6. Educate yourself. Understanding the basics of investing, such as different investment vehicles and strategies, is crucial. Resources like Vanguard's Guide on How to Start Investing can be helpful. 7. Assess your risk tolerance. Determine how much risk you're comfortable with and choose investments that align with your risk tolerance and financial goals. 8. Stay informed. Keep up with market trends and economic indicators to make informed decisions. However, avoid making impulsive changes based on short-term market movements. Remember, all investments carry risks, and it's important to do thorough research or consult with a financial advisor before making investment decisions.